Well, let me ask you this, James. What generally stalls a loan, or what's a common issue that comes up for a small business owner?
Sure.
They weren't seeing, and it usually...
Typically from a stall or a timing standpoint, knowledge is power, as they say, and for us, information is critical. And so the more clear information you have, the better information you have.
Okay.
That's something that will help us as far as our underwriting of the credit. I notice a trend is with a lot of businesses that maybe have started but now they're looking to expand. Mm-hmm. They may not have a qualified accountant or CPA that does their financials. They may have gone out and bought QuickBooks and have tried to do an admirable job of making sure that they do all the correct entries, but a lot of times what you see is those statements don't balance. And so if they don't have a full-time CPA, and the financial data isn't accurate, that usually will drag out the process. Now we'll try to coach them through that on steps they can take to avoid that. But I do think it's critical. And also going back to the initiation of the business, you really should have a qualified CPA to kind of walk you through the different types of businesses so you can avoid, you're looking at two liabilities basically. Personal liability as far as litigation, and you're looking at taxation liability. Obviously you want to limit the amount of taxes you have to pay. And with the different structures available, just a bookkeeper or someone with limited accounting knowledge might not be qualified well enough to guide you through that process. And so I think as far as slowing down the loan process, there's no saying if you can't measure it, you can't manage it.
Right.
It's difficult for us to underwrite a credit if the financial statements aren't timely and they aren't accurate. And so I've seen that slow down the process.
What do you do, though, for the entrepreneur or someone out there wanting to do a startup and they have limited financial information to provide coming in for that loan, and they really want you to loan on a dream or an idea?
Well, we don't really loan on dreams or ideas.
Absolutely.
There is, I guess the quantifiable part of the dream is we would like for you to prepare some projections. Okay. We would like to see what the opening financial statement looks like from the balance sheet standpoint, which is your assets, your liability, and the equity you have in it. And then we want to see what your sales projections are, and you have your monthly budgeted expenses. What I typically like to see is for that first year, a month-by-month budget of projected revenues and expenses. And also on the revenue side, what's your basis for making those assumptions?
Okay.
How many sales, how much per sale are you looking at to generate, how much is the growth? Generally speaking, a good rule of thumb is if you try to project sales that expand more than what your traditional average sales tax expansion rate is, right, that would cause someone like me to question that, because generally when you put a really large sales growth number, your expenses really need to match up, because you're either going to have to loosen credit standards, which may drive up your bad debt expense. You may have to do more advertising, which is going to drive up your ad budget.
Absolutely.
You may have to do additional hiring of salespeople or other staff. That's going to drive up your personnel expense, which is always your number one expense.
Absolutely.
And so you need to be able to justify those assumptions in those projections. But those are also very helpful, because then we have a roadmap. When I say we, both the customer and the bank, that we have a roadmap or a benchmark. And obviously it can change as you go along, but it gives us a good thermometer of where the business is going if we're staying on track.
Excellent. Great information, James. Again, appreciate you sharing your knowledge with us. But that wraps up today's segment as we continue this discussion about financing for small business owners. Join us for our third and final installment of this series, where we look at long-term for a small business. What is the legacy of that business? What is the succession planning? And how do you prepare for retirement? Please join us, and remember, as James reminded us, knowledge is power when it's shared between the T's. Thanks for watching.